Today is November 17th, 2010, and again we'd like to welcome you to today's presentation on three comparative charts where we would be highlighting the Fibonacci trading analysis using the three methods of approaching the euro on a daily basis, cable, as well as the cross rates as far as comparative analysis for these three major currencies that we normally trade, and we've been following and trend following the analysis and the movements of these three major currency pairs. However, we would like to highlight first here on the euro that coming from the previous high of 1.4281 down to as low as 1.3446 had been much influenced by the fundamental report on the sovereign debt crisis over in Europe and the corrective move of the dollar index from the 75.63 low basis point to as high as 79 basis points, where we indicated that the previous key prices to look for the dollar index are in the range between the 77.33 to the 78.25. As long as the dollar index stays afloat in these levels, and the corrective move would be to as high as 79.2547 range on the dollar index. Any corrective move downwards would be influenced by the corrective movement on the euro as well as the euro pound. Correspondingly, with our market view report dated the 9th and the 11th of November, we did indicate that the influencing factor for the euro dollar would have been heavily influenced by the cross rate as well, as far as price adjustment is concerned. Comparing it now with the current price on the cross rate on the euro pound, you would see here that it did made a low on the 0.8449 level, where it stayed currently and working at 0.8532, where based on our market view report that upon targeting the 0.8550 level, this 84.48 would have been the extension, and resting exactly on the Fibonacci fan support level. And looking at it here, first of all, going back here, so we would be able to indicate this is still a live market that we're looking at. So if we're pausing in the market, sometimes it's because we're also watching how the market is moving. So looking at now, transforming it into a weekly basis by adding the Fibonacci, the second Fibonacci approach of using the fan formation on this chart on the euro dollar, overlaying it with the regular Fibonacci retracement, where you could find the 68, 50, and 38.2 levels of retracement, but overlaying the fan formation based on the Fibonacci, but applying the approach here would be able for the traders and the investors, especially the strategists, to be able to cross-reference the supports and resistance fairly, looking at it more accurately, where in between the prices of the retracement, where the prices would be leveling off either on a support level here, as you could see, and looking at it on a weekly basis, that a slight increase on the momentum that made the correction after touching a good psychological and technical support level, and looking at it still that your stochastics here is still on the negative sentiment, and there is still no indication that an up move is still in the making. However, as you would see that looking at it, that there is lower, or there are rather lower bottoms or higher bottoms from the previous low, where 1.1874 is the basis of our major support trend line. So with that extending it, it is still on a medium term a higher direction, and on a weekly basis the minor corrections are being made, and transforming this now to a monthly basis, it is still on a corrective move, simply because if you look at it, let's try to see if we can expand this so we can have a better view. And looking at it here, you would see that there is a divergence, a selling pressure, while moving towards the high side. Although they say that this is a lower top from the two previous and a lower bottom, so the overall projection for the euro on a long-term basis is still downwards. However, this particular trend should not be discounted, wherein there are major corrections within a major trend. So if there are major corrections within a major downtrend, so this engulfing bar would simply indicate, though it's not a real reversal on a technical basis, it would have if the prices would make a new low. The same application would be made here on the cable. We're looking at it on a daily basis, where it is resting on the trend line support at 1.5867. Looking at it here on a weekly basis, it is indeed the low indeed touch the 1.5837, where it is making a slight correction at 1.5928. But however, simply because this configuration here with a candlestick, more of a hammer, would have been, a lot of people would say this correction is now a turning point for the pound to move lower. Of course it did, simply because this particular correction with this particular technical candlestick would have indicated so, and with the other reports on the UK negative for the pound had made its price adjustments made known. However, it would have been different if the opening price or this particular hammer would have been located higher than the previous bar. Then that would have been, or could have been called, an exhaustion price and trend reversal. But at this point in time, as you could see also together with the euro, that the lows are still higher from the previous, and significantly it is a good support. Transforming this now, as you could see, including the Fibonacci fan on a downward approach and application, that the high of the cable at 1.6297, say 1.63, have touched that particular resistance. So it's in between. When you apply the Fibonacci fan formation either on a trend moving higher or a trend moving lower, then it would provide you a more accurate support and resistance where prices could be seen where it would be resting at this point. Looking at it on the stochastic, is still up, although a slight momentum, but there is no actual divergences at this point in time comparing it with the euro. With that said, applying the same application for the cross rate on a weekly basis, you would see that resting on, on the within this Fibonacci fan on an upward trend, this channel here, as you would see, is a Fibonacci channel where after penetration moving lower, okay, reaching the 61.8% retracement, but however, by applying this particular enhancement, it would provide you the indications where the prices may stop in between as a cross reference with an overlaying with the regular Fibonacci retracement approach. So with that said, with this correction, however, looking at it more on a monthly basis, although it may be too tight for you to see, let's expand it, that this particular formation here is more of a down from a major trend line, but like I said, simply because of its tightness on price levels where we're approaching the Thanksgiving holiday period and the end of the year, end of the quarter trading, then more likely that liquidation and position adjustments would be experienced, and prices for the dollar would have to have some corrections along the way. Thank you very much, and hope that this approach on enhancing your trading analysis by using the three methods of the Fibonacci, including other than the fan formations, would also include the channel, where you could also find it in our newly released ebook Megatrade 101, The Art of Trading, that you would be found and has a link on our website. Thank you very much and have a pleasant day.